All right, so last week in this class, we went ahead and did the introduction to binary options. And we went over to what support was, what resistance was. We introduced everybody to the indicators that we're going to be using, okay? I'm going to review those pretty quickly, okay? So we use, for the bottom, we're going to use the vortex, okay? And we're going to leave that, we're going to leave the vortex on whatever the manufacturer setting is. So we're not going to make any changes. We're going to add.
Sorry, Edgar, are you going to share your screen?
Oh, I apologize.
And hello, sorry.
It's all right. I apologize very much. And thank you guys. And now you can see my screen, right? Okay.
Yes.
All right.
Yes.
So last week we went over what support and resistance were, the resistance level being the higher price that the particular pair can go to, and the resistance being the highest price and the support being the lowest, that the price is going to go ahead and go. So we went over that. I showed you how to go ahead and find it. Okay, and I'm going to go ahead and review it. You take a look at your oscillator, and right here is going to be your resistance level. Okay, and your resistance level is going to be right around here. Okay, because that's where the wick ended up with. And what we did last week is we marked it with a horizontal line. So we went ahead and went over here, and we made that line red. And we made it 5 pixels so we wouldn't miss it. So there's your resistance level. Now we went ahead and looked at what the support level, and your support is going to be right here. Okay, so we're going to mark that. We're going to use another horizontal line, and we're going to bring that line right down here. We're going to need that green. We're going to make it 5 pixels. And now we clearly have defined what our support, and let me move this thing up a little bit. What our support and resistance levels are. And as you can see, the line is going to move farther down because this resistance level is, it got broke a little bit. So my new resistance is up here, okay? And we're looking at the support level. Let me get this, grab this line over here. Bring it up so that we can go ahead and bring it right there. So here's our channel, okay? Here's where we're going to go ahead and take a look at the price is going to go up, going to bounce off, and going to come back down, okay? So that's what we're looking to go ahead and see where price action is going to be. Now, over here at the bottom, we have our indicators. We have the vortex, which we're going to leave stock. So we're not going to make any changes. We have the momentum, okay? It is set from factory set at 10. We're going to click on the pencil, and we're going to change the period to a 10. And we're going to click save, okay? On the oscillator, we're going to do the same thing. We're going to change the gate period. Excuse me. We're going to change the K period to 17, the D period to 6, the smoothing period to 5. We're going to change it to an EMA, which is the moving average, okay? And then we're going to go ahead and come over here to styles. We're going to make the K period green, the D period red. We're going to do an 80 and 20. And then we're going to define the 80 as a red. We're going to change it all to 2 pixels. And we're going to define the 20 as a green. And the reason that I do that, and then we're going to click save. The reason I do that is, as you can see everything over here in my chart. It's nice green and red. All right. So green is going to go ahead and tell me to go ahead and buy. And the red is going to tell me to go ahead and sell. All right. Clearly defined over here, the 80. Okay. When you get over the 80 over here, you're looking at the pair being oversold. Okay. Overbought. Okay. And as you can see over here, it's going to go ahead and bring it right down. You see the crossover here, also bringing it back down and going into a sale. So all the indications over here is that everything is going to a sale, and we will go ahead and get into that trade. Actually, we should have gotten in back here and read it all the way down, but we're teaching right now, so we're going to miss on that. All right. So on the top over here, we're going to have two moving average. First moving average over here is going to be a 4, okay? And it's going to be an SMA for the moving average. We're going to change the style to white and 3 pixels. And as you can see, we're going to save that. And as you can see, that moving average is following price. So what it's giving us is an indication of which direction the market is going, whether it's going on the upside or it's going to the downside. So it's giving us an indication of the trend. The second moving average, okay, we're going to set to 50. It's also going to be an SMA. We're going to change the style to green or whatever color you want, okay. Also make it 3 pixels, click save. And now we have over here, we have the 50, which moving average is going to indicate to us if the price is like it is right here, we're mainly going to be looking at buys unless the trend is going to the downside like it is right here. And we're looking at, clear selling pictures. Okay. Or if the price is underneath the green line, okay, as you can see over here, then we're going to go ahead and look at sales. Okay. Unless the trend again is in the opposite direction. All right. So that's pretty much the definitions that we're going to go ahead and have here. You can also add a fractal. Okay. If you're going to add a fractal, we're going to go ahead and change that fractal to 2. Okay. And the reason we would go ahead and do that is to get an indication of whether the market is going to dip or the market is going to go up. Again, you're going to change the fractals. You're going to change the style. You're going to reverse them. You're going to make the up red, the down green. And again, my brain is very simple. Red means sell, green means buy. So I just want to go ahead and make sure that all the signals that I'm seeing are giving me the same thing. So now that we have all that out of the way, does anybody have any questions on those indicators? Did anybody miss anything on the indicators? Unmute yourself and let me know. All right, so we're going to go ahead and move forward. All right, so right now, what are we seeing on the screen? Okay, here's your resistance. Okay, obviously we went ahead and bounced off of it and made a dive for the downside. Okay, now our price is underneath the 50, underneath this moving average, the green line. We're looking at the vortex is indicating sale and it's getting separation over here. We're looking diving on the 80. Okay, so everything is indicating sale. I'm going to go ahead and do 30-second trades today. We're going to make this very fast. So I'm going to, and I missed that. Well, I'm still in time. I'm going to get in for 30 seconds and I'm going to do a sale. But obviously, as you can see over here, we could have traded this 10 times and won all of them, okay, because it went deep into the sale side. I mean, this thing went off the edge of the world. So come on, come down. Calm down. Down, boy. And I broke one of my cardinal rules, never get into the trade when the candle is still in process, and that's why I lost it. Okay. I usually don't get into a candle, in the middle of the candle unless it goes into engulfing candle like this over here. And in that case, we got into late on this one. And as you can see, it broke the support and it continued down. So we have a new support. So I'm going to mark that over here. And now it's bouncing back up and going back to the sales side, even though the indications over here still tell me that I have a pretty good sale going in. So I'm going to wait for this candle to go ahead and finish. We have the fractal over here. It's telling me that it going to the downside and it continued to go ahead and go. I don't have a fractal at the bottom over here yet. So it's not telling me that it's about to reverse. And this is probably going to go into a little bit of consolidation because it's rejecting the support level. So it's going to go up a little bit and going to go into a little bit of consolidation. Let's take a look at this next candle. We're doing 1 minute candles. So we got plenty of time to go ahead and get in the 30 seconds. We're going to get on the 30-second trade anytime. And it's breaking the support. There it goes. There it goes. So we're going to put a new support level. Let's wait for this candle to close. But you see why I waited. If I would have gotten in for a buy right there on that green candle, it completely reversed on me. And it's now going to go ahead and I'm going to wait for 6 seconds, 6 more seconds. All right. So here's our new support level. And let's see what is going to happen over here. Whether it will reject it again or it will continue to go ahead and go down, and it's continuing to go ahead and go down. So I'm getting on a sale right here for 30 seconds. As you can see, I'm halfway into the candle. The candle was 30 seconds into it. So I'm just trying to see if the trend is going to continue. You got a lot of separation over here. You got separation over here and heavy on the scales over here. So we have a fairly good chance. Come on, come down. And we lost it. And new support level is right down here. I'm going to do the end of the wick. All right, so we're going to wait for this instead of getting in the middle of the candle, which is one of my no-nos, and I'm breaking my own rules. We're going to wait for this candle to complete. It is bouncing back up, and we're going to go ahead and see whether we get a green candle or we get a red candle on the next one. Indication says that it's going to be red. As you can see, the price is now flattening out a little bit. It was on a very steep downtrend over here. Now it's looking to go ahead and flatten out. So we're going into a period of consolidation. And you can see that over here also. The oscillator is showing that although red is on top and the sale volume is controlling this, it's also showing the price is going to continue to be flat. So you will see these candles are going to be pretty much equal in size. All right. So we have a wick down to the bottom and the body is right up on top. Okay, you see that? That is an indication, okay, that is what is called a hammer. And it's an indication the price is going to switch. Okay, so it's going to reverse on itself. Look at that. It's like I'm calling the races. All right. We're still not sure which direction this is going. Okay, so we're going to wait. And we're going to buy now. And the reason for that is that the candle is started to stretch out into an engulfing candle. Anytime you have an engulfing candle, you're going to go ahead and get in on this, on the buy or the sale, depending on the color of the candle. So we got into it. And the reason also that I went ahead and did that, if you take a look at the oscillator over here, the green is dominating the red. Okay, so that's an indication of a buy. And that's go ahead. That's why I went and venture in there. And as you can see, we won that. Okay, so we won that trade. All right, and it's not a perfect scenario. Okay, perfect scenarios are like this right here, where you get and catch this downtrend and you ride it all the way down. These are 1 minute candles, so we could have done 1 trade, 3 trades. I would have passed on this too. I would have done 4 trades, 5, 6, 7 trades, 8, 9 trades, and I would have won all of them. I would have passed on these 2 and then this one because they're very, very shallow candles. So I would have passed on them.
Excuse me, Edgar.
Yes.
What's your time frame on the?
My candles are set for 1 minute.
Okay.
And I'm trading for 30 seconds. Okay. And look at what happened over here. Look at what happened over here. You see that you have a green fractal, okay, which is indicating that the price is going to go to the purchase side, okay, to the buy side. But then immediately you got a red fractal on top, reversing that, and it went down. Now it's starting to go back up again. Okay. You got to be paying attention to all the stuff. You pay attention at the bottom over here. You're seeing green over here. You're seeing the scales starting to turn to green, even though it's changing back and forth between green and red. Okay. What we're seeing is indication that this price, which is on consolidation right now, is about to go ahead and go to the upside. Okay. So what is that indicating? We went ahead and got all the way down here. Okay. We got all the way down here to the support level. And then we're looking at the trend to get ready to bounce up. Okay. It hasn't quite done it yet, but that's what it's supposed to do. It is hanging around here, waiting for enough strength to go ahead and take off. So what we're going to do is we're going to be patient and we're going to wait for all the indications to give us the clear signal that price is going to the upside. Okay. So we're going to go ahead and wait these candles out. And I know it's tedious, it's boring, but if you want to go ahead and maintain your account and not lose your account, you want to go ahead and be disciplined and wait for the right opportunity. All right. So that's exactly what we're doing. We're waiting for the right opportunity because we know that we came to the support level, and unless it breaks it, we know what it's going to do. It's going to go ahead and come over here and it's going to trace back up. And what it's doing over here by hanging around what it's doing is you see the wicks go down and touch the support level. What it's doing is retesting that support and then bouncing off of it and changing directions on the opposite side. Okay, any questions so far?
I put a question in the chat, Ed.
All right, let me take a look at the chat. How did I know that that particular candle was forming an engulfing candle? Because I'm paying attention at the candle, okay? I know how many seconds. You see my clock over here? Okay, my clock is keeping track of the timing on the candle. Okay, like right now, there's 45 seconds left on that candle that is crossing the support level. Okay, there's 41 seconds. So I know how long into the candle it is. And the bigger the candle gets, okay, the more that it's turning into an engulfing candle. Okay, when the body of the candle is solid and it starts getting bigger and bigger and bigger, and you don't have a wick, okay, on either side, there is no wick, or in the case of this one, see the wick is minimal,
Right.
okay, that's an engulfing candle, okay? So that's a signal that the market is going in that direction and you want to go ahead and get in.
Right. No, I recognized the engulfing candle from Forex, but I was trying to figure out how you knew it was going to become one before it actually did. But I understand now because you were watching, you were watching the time, and I thought it had something to do with that, but I wasn't sure. Okay, thank you.
Yeah, I'm watching the duration of the candle. Okay, like for example, over here, we're breaking support once again. Okay, this thing wants to continue to go ahead and go down. So I'm going to go ahead and mark my support level right down here. Okay, waiting for this candle to go ahead and finish. Okay, because that candle is going to determine how low this is going to go. See the wick right there? Okay, so if it's continuing down, I mean, this thing is diving. And one other tool that I use a lot to take a look at what the trend is the kernel channel. Okay, and what the kernel channel does is you see over here, okay, it's telling you which direction the trend is going. And then what you want to do by using the channel, this is a completely separate technique that can go ahead and be used by using the channel, is when you're outside the channel, like it is right here, price is outside the channel, you stay put, you don't trade. You wait for the candle for price to come into the channel, okay? So right now we're below the channel. So we're going to wait for the candle to come to the channel right here, and then we get into the buy, okay? Because it's going to go in this direction. Again, you know, all of these things, they all have the same principles. You know, you want to go ahead and learn how to read all the stuff one at a time. But right there is our new support level, and it's still hanging around. It's still going on a downtrend, but you know, it's not defined enough that I want to go ahead and risk doing a trade. Okay, because even if you go 1 minute, it can reverse on you real quick. Okay. So, you know, right now you see over here, you're looking at the oscillator. See how flat it is? Okay. So that's telling me that it's going to hang around here for a while. The red is on top, so it's telling me sell. Okay. And it's breaking the support again. This thing wants to continue to push down. All right. And there we are. We're in the right place. It's turning around again. Let's wait at this candle, see what it does. It looks like it's going to go to the upside, but we still have a fractal saying that it's going down. We have a big separation over here saying that it's going to stay in the sale side. We have red on top over here, but it's absolutely undersold. So this thing is getting ready to go ahead and take off to the upside. I just don't know when. And no, it's going to sell some more. All right. Let me add another thing in here. Yeah, this thing is selling big time. But see over here, the green is starting to come on top. And we see the change over here. I'm going to wait for this candle to close and see if I get green scales at the bottom over here. So we got 28 seconds. All right, 20 seconds. All right, we're going to wait on the next candle. If the next candle is green and stays green for more than 10 seconds, we're going to go ahead and go in a buy. All right, so it's green. And we're going to buy now. There he goes. Come on. See over here, the green is staying on top. The green is coming towards the middle to go ahead and crisscross with the red on the Bartex. We have green scales over here. We won that trade and we're going to hit it again. Okay. We're going to go into another buy because we have our fractal over here saying that it's going to continue to climb. We have the green line coming out of the 20, about to go in the direction of the 80. These lines are going to crisscross pretty soon. All right, so come on, let's go. Let's give me another buy. Come on, a little bit more. Come on, up you go. Up you go. There you go. Missed it by 2 seconds. 2 seconds. Nope, actually got it. Actually got it. So we won that one. Okay. So now I'm going to wait for the close of this candle. Everything is indicating the price is going to continue to go up. We got our fractal over here. Okay. We got the higher saying that the price is going to go to the high side. We got the candle going on the opposite direction. Scales over here are red. So we're going to go ahead and wait for this candle to close. Okay. If it opens back up in red again, we're going to go ahead and wait some more. And as you can see, it's just a waiting game. It opened red, but then it changed to green and changed to red again.
So when it changed to green, is that when you won?
Mm-hmm.
Okay.
Okay. But we have another red candle pushing down. Price is pushing down. See that the green is over here flattening a little bit and flattening a little bit over here. Okay. So we're going to continue to wait because we're looking for a purchase. We know the price is going to go up, but we got to wait for our opportunity to go ahead and present itself. If you want to go ahead and risk and buy the sale over here, you can do that. However, as you can see, this thing can turn on a dime like it's doing right now. All right. And you go into a trade unless you're doing 5 and 10 seconds, which is leaving a little bit too fast for me. You're going to most likely go ahead and lose the trade. So right here, you're seeing that the candle is going green and red, green and red, green and red, green and red. See the scales forming green on the bottom. See this line starting to go ahead and go up a little bit more. Okay. So we're in a period of consolidation still. So we got to be careful. Okay. I mean, if you can take a look over here. All right. Take a look at what's going on with price right here. What is it doing? Is it changing a lot? No, it's not. It's staying pretty much in the same area, right? That is what consolidation is. I mean, you can go ahead and try to trade in consolidation, but chances are that it's going to go ahead and change directions on you, and you're going to go ahead and lose your money. Does that make sense? See how am I for time? Okay. Any questions on what we have so far? Okay, we have
Yes,
done now. Yeah.
Yes, I wanted to know what was the setting for the Keltner and possibly your moving average. I was driving at the time, so
Okay, so I have two moving averages. I have one moving average, the white line that is going to be set for the 4 on a SMA. Okay, I made mine white. You can make it whatever color you want, and I made it 3 pixels. Okay, the second moving average I have set to 50. That's also an SMA. I made mine green, and I made it 3 pixels. Okay, the idea is that the white moving average is moving with price, which is going to give you a direction of the trend. And then the green line is your 50, and it's going to tell you when to buy and when to sell, when to look predominantly. Like right now, price is under the moving average, so we're looking for sales unless you have reached your support level and it's not looking it's going to break it. Then we're going to be looking for uptrend. We're going to be looking for changes in direction, and we're going to be looking for purchases. Okay, same thing applies to the top side, to the resistance level. Okay, then when it comes to the kernel I usually don't use, but here is your settings. You set a 20, a 10, and a 1 multiplier. Okay. And basically what the kernel over here is telling you is, like right now, price is getting to the bottom of the kernel. Okay. So what you want to do is you want to go ahead and buy it going to the outside of the kernel. You do not buy or sell when the price is outside the kernel. You stay put. Okay, because it's making a move. Does that make sense? Okay.
So the settings for kernel one more time is what? I just got in it. So I got one right here.
I set mine. People do different. Mine is set for 20 for the EMA period,
Okay.
10 for the ATR period, and
Okay.
1 for the multiplier.
Okay. Thank you.
Okay.
It was there.
All right. So we have done 5 trades, 1 3, lost 2. Okay, so that's not too shabby. That's not too shabby at all. All right, so 5 trades a day. I mean, you're looking over here. If you're looking at the fake money, we lost $200 to start, but then we made 300, 460. We made about $450. Okay, so that's not a bad day. Do we agree?
Oh, I definitely agree. But could you show that again? Like, how did you calculate that?
Okay, I'll go over here to where it says trades. I'm going to look at my closed trades, and I see over here that I made 5 trades. I made 2 trades of $100 and lost them, so I lost $200. but then I made 3 more trades of $100, and I made 180 here, 180 there, and 180 there. So
Okay.
we're looking at 300 plus 160 is 460 plus 80, it is 540.
Yeah, okay.
Just basic math. Sorry, I'm
No,
good
no,
with
you're
numbers.
good. I just didn't even see it. I didn't even see it. I was looking at only the 100 and I was like,
Yeah.
what is he counting?
Yeah.
I got it.
Yep. All right. So now we're going to change gears a little bit. Okay, that's the world of binary. Over here, we try to go ahead and give a little bit of both. We do the binary side, and we also go ahead and do the Forex side. So what we're going to do now is I'm going to switch my screen. Oh, and there's people over here in the waiting room. Let's admit all of them. I'm so busy teaching that I did not keep an eye on the waiting room. All right, so
I can help with that at some point.
yeah, let me, who was that, Gary?
Yes.
Okay. Let me go ahead and come over here. Actually, I'm going to make you Carrie. And I'm going to make you Marilyn. Are you up to it? Marilyn? Okay, how about Sunita? Can you do the waiting room for me?
Yeah, one person can do it.
I'm on my phone.
Yeah,
I just want to make sure that if somebody misses it, somebody else gets it.
oh, okay.
Okay, so Sonita and we have Sonita and Carrie helping me out. Thank you so much, ladies.
Mhm.
All right. So what we're going to go ahead and do is we're going to change my screen share to the other screen. Can you see my screen?
Yes.
Yes.
Okay. So this is a naked chart in the MT4 in Forex. As you guys know, we have a ton of indicators that are available to all members. And then we have also some indicators that are available to only the VIPs. So I wanted to go ahead and show everybody the difference. The first 4 indicators right here, okay, you can see, let me see if I can widen this up a little bit more. See over here, you have Trainology indicators. These are all indicators that Trainology has available, okay? The last ones are available to the VIP, but the first 4 ones are available to all members. And I wanted to go ahead and share that. To begin with, the first indicator that you have available to you is the moving averages, okay? So basically, the way that you will go ahead and add it to your chart, this is a chart completely empty. It has no indicators on it. We're looking at gold right now, okay? So, and the reason I picked gold is because the market is closed, so it's not moving. It's easier to go ahead and teach when it's not moving. Everything right now is pretty much closed. So you go ahead and take the technology, the Trainology moving average signal, and you go ahead and put it into the chart. That's going to bring that indicator in there. You click on allow DL imports, okay, and click OK, and that activates it. And this is what it's going to go ahead and look like. So you have your moving averages, okay? You have the moving averages over here, indicating in which direction the pricing, as you can see, the move with price. And then you have your red arrows, okay? You're going to have your red arrows. And if it's looking for the purchase, you're going to have your blue arrows. So what this is doing is they're giving you indications on where to go ahead and get in for a buy, okay, like over here, and when to go ahead and get in for a sell. And this is mainly to go ahead and aid you in doing sniper entries, if you're going to be a sniper type of trader, get in, get a few pips and get out. Like for example, over here, you will get in at this candle to go ahead and buy. All right. You're looking at getting in right here and getting out right there. That's basically 7 pips. Okay. So it's quick strike type of moves that you're going to go ahead and do in this type of trading. You get in here for the buy, for the sale, you ride all the way down here. That's 14 pips. Okay. So, it's going to be your quick strike type of scenario. We're going to go ahead and remove that. Okay. I'm going to get rid of that indicator. And then I'm going to bring this one over here. This is the pips FTS indicator. All right. And basically what this is doing is superimposing the Hachinashi candles on top of the candles. And it's mainly to give you an indication of where the volume is glowing. If you see the blue, it means that the the volume is going to, is on, like right now, is on the buyer side. And then if you see the red is going to the sale, and so you can see it changed over here to the sale side, and it continue to go ahead and go to the sale side until the end over here, where this is the blue. And this was a very nice ride on to the sale side on Friday morning, that, if you took advantage of it, it went pretty cool. And I'm going to go ahead and show you at the end. On Thursday night, Dr. Manoa taught a new strategy, and I saw this move coming and was a very happy camper. Okay. So now let me go ahead and take this indicator out. All right. Next indicator is going to be your supply and demand. And basically all this indicator is doing exactly what it says, is marking your supply and your demand zones. Okay. So that you can know where they are and take advantage. And it tells you over here whether it's going to go to the demand side or to the supply side, where basically is at the moment. Okay. So let me remove that indicator. Okay. And this last indicator over here is the last indicator that's available to all technology partners. Okay. It basically, what it does is it brings this to the bottom of your chart so you can navigate it a little bit quicker. You can go ahead and change between pairs. Like right now we're in gold USD. We can find US JPY, Bitcoin, NASDAQ 100, S&P 500, the US 30, US GFF. But as you can see, you can change the pairs rather quickly. You can also change the time zones very quickly. You're in 1 minute. You can be in the 1 hour, 4 hour. Okay. So, it enables you to have kind of like a cheat code so you can navigate between pairs and between time zones, time frames with a lot more ease. Okay. So we're going to go ahead and get rid of that one. And now we're going to go ahead and start into the indicators that are available to the primary members. To the VIP members. VIP members have the ability to go ahead and do indicators like this one over here, which is the future trend. And what the future trend basically does is, as its name says, it gives you a picture into the future. Okay, so from this point, there are 20 candles to here. So basically, since we ended over here, you got a few candles into the future idea of which direction the market is going. Like in this case, it's telling me that it's still to the downside, okay, but it's getting to change and go to the upside, going to a buy right around here. So if I'm looking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 candles into the future, is going to change into a buy. Okay. We're in the 4-hour time frame. Okay. So that means that 19 times 4, that's how long you have to be safe on a sale market. Does that make sense? Anyone? Does that make
Yes.
sense?
Yes,
Okay.
yes. I was trying to unmute.
All right. So we're going to go ahead and get rid of that one so that we can bring the next indicator on board. Okay. And I hope that this is helping, because we got all these indicators thrown at us, and unless you try them one by one, you have no idea what exactly they do. Okay. And that's what I did. I tried them one by one to understand exactly what they do. This right here is the globalist. I am in love with this indicator. Okay. Because this indicator is part of and of course it's not showing up. Why is it not showing up? Oh, here it is. All right. What you're going to see with this indicator is you're going to see a green arrow, or you're going to see an orange arrow, like you see over here. Orange is giving you an indication that it's going to go into the sell side. And so you can see, if you go ahead and mark where it showed in a bullish candle, and immediately after it showed, it went red, went back to green for a short period, and then boom, the bottom fell out. Okay. If you take a look on the opposite side, all right, here's the green. All right. You mark the green, boom, it went up, slightly down, but boom, it went up again. Okay. So if you go ahead and measure from the moment it showed up, if you went ahead and wrote this from here to here, that's 103 pips. It's a lot of money, folks. At a standard lot, that's $1,030. Okay. But that's what the globalist does. It's going to give you an indication of which direction the market is about to change to. And all you doing is reading the signs and taking advantage of it. Okay. Next indicator is the H power. Okay. This indicator is a little bit more abstract. Okay. Basically, what this is doing is reading, and it's telling you where the market is going. Okay, whether it's bullish, whether it's 60% bullish, and this is on the 4-hour. As you change the time frame, it also changes. Okay. All right. See the difference? So it gives you the arrow indication. You have 3 up arrows, 1 sideways arrows. It tells you to go ahead and proceed with caution. Okay, that it's about to change to the bull side, but proceed with caution. And why proceed with caution? Because you can see if first price fell, and then boom, It's spiked. So you're going to use this indicator along with other indicators to go ahead and aid you in making a decision. Okay. You don't use this indicator by itself. Technology hike is just your high Fibonacci candles. And again, high Fibonacci candles are going to give you an indication of where the volume is going. Blue, you're going to the buying side. Red, you're going to the sale side. So what you're doing is by superimposing these over here, okay, you're getting a picture of where things are going to go, and you know whether you want to go ahead and get into it or not. Like over here, see this red trend, boom, and then it changed to the blue, changed to the red again, and then boom, it changed to the buying side. Okay. All right. Let's bring this over here. This is gold. See gold, what it was doing Friday, and then boom. This is around the time with the when all the speculation was going on with the Ukraine, the invasion. Then over here at this point, this is when they invaded, and you see the price of coal shot up, and then immediately, right after, it corrected and fell down, and it looks like it's going to go down to the downside some more. It's going to continue to lose. Okay, let's go ahead and get rid of that one. Light index, and this doesn't want to come off. Let me go ahead and get this off by doing this. Close. What? There we go. Wrong. That was a wrong move. All right, let me look at my
Hey, Edgar, I got a quick question.
Sure.
That new strategy that Manoa put out, I
Which
haven't
one?
been able to find the one that he did just this last Wednesday.
Last
The
Thursday.
Was it Thursday that he did it?
Last Thursday. And that's going to be on this template right here. It's a supply and demand extreme levels.
Right,
Okay.
right. Have you seen the video on that? I can't find it anywhere.
He hasn't posted it yet. I haven't seen
Okay.
it. Yeah, I haven't seen
Alrighty.
it. But this
Okay.
is a sweet strategy. Okay. Go back to the 4 hour. This is a sweet strategy. Let's apply that template again. Okay. So over here, you have, oh, come on. Let's go to the end. Over here, you have several indicators that are working at one time. Okay. Let me bring the list out. You have the globalist indicator, you have a moving average, and you have the technology power. Okay. Those are the indicators that are going to be over here on top. And then at the bottom, you have the supply and demand, which is this green, red, and blue line are. Then you have another moving average, which is what the yellow is. And then you have the commodity channel index, okay, which is why it's going to mark over here 200, 100, 50, 100, and minus 100, minus 200. Okay. So basically, and let's see, I'm on the 4 hour. So basically, what you have over here is Friday morning. Okay. Friday morning, you had this orange arrow up here, right here on top. Okay. So this is the indication that things are going to go to the downside. And basically what you see over here is follow this green line. This green line is over at the plus 200. So that means that this market is absolutely and completely oversold. And it's about to go ahead and crash down. So what the strategy says is you can go ahead and get in right there and take the immediate write down, which is going to go from right there to the purple line, okay, which is your moving average. All right. In which case, if you do that, you're going to come from here to here. Okay. You're picking up an immediate 112 pips. Okay. Or you can go ahead and wait for the blue and the green to cross, which happens over here. All right. And then go ahead and get into a sale from there. Okay. Until the price reaches at least 100 pips. Okay. As you can see, the price is going up and going up and going up and going down and boom, and it's about to take off. So if you got in late and got in over here, okay, you're looking at 100 pips being right around there. Okay. So with the market being closed and closing where it is, you got to wait for all that to write down. So you're still on this trade. Okay. And you're safe because you have set your stop loss right up here. So, you know, you're not hitting it. You're nowhere close to hitting that stop loss. Okay. So you're now waiting for this to come over here. Me, on the other hand, I like immediate results. So I took this and I wrote it from here to here and made my money. Okay. I did not get on the second trade. I could have, but I haven't.
Hey, Edgar, what's your moving average on the purple and your moving average down in the stochastic?
Okay. Your moving average on the purple. Let me go ahead and come over here to the indicators list. Moving average on the purple is going to be set to 150, and it's going to be an exponential moving average. Okay, and I chose magenta for the color. You can choose whatever color you want. Okay, the moving average for the bottom, okay, is going to be set to 144. All right, it's going to be linear weighted. All right, and it's going to be yellow. And you got to make sure that you set it for first indicators data so it appears on the bottom and not on your top. Okay.
And the comedy index, can you show me what the settings are for that?
The what?
That last one down on the bottom where the red
Commodity
green, and,
channel.
yeah, the commodity.
Okay.
Did I say comedian?
Yep.
Comedian.
Yes, you did. The commodity
Too
channel.
Too much joke.
The commodity channel. Okay. You want to change, you want to set the period at 14. You want to have your level set for minus 100, 100, minus 200, 200, and 50. Okay, and again, you want to make sure, okay, that you set it for the first indicator's data. So that appears over here under your moving average. I mean, under your supply and demand. So everything is right here on one graph. Otherwise, they will come up here. Okay,
Okay, thank you.
all right. Let me go ahead and go fresh again to go to the next indicator. Close this. You're gonna go over here. And we're gonna do this template. All right, and we're going to go to the list. And we're gonna get red. All right, so we're back to naked trade, a naked chart over here. Pull in a little bit so we can see it better. Okay. All right, so the next indicator is going to be the light index. All right, and when we apply that by itself, it basically what it's giving you is the little white arrows. Okay, and what those white arrows are indicating is okay, it's indicating in which direction whether it's going to go towards the purchase or whether it's going to go towards the sale. Once you see that, as you can see, you see the changes rather quickly. Okay. We usually use this arrow in conjunction with another two different type of arrows to go ahead and make a buying or a selling move. Okay. So we don't use it by itself. Let's go over here and we're going to take that indicator out. Okay. Pivot points is the next indicator. And what this does is it tells you the points for the direction. You're going to have points during the daily and you're going to have points during the week, and during the monthly, they're going to indicate price changes. Like in this one over here, we have price above the daily. So we would go ahead and wait for other indicators to work with this to show us in which direction to go ahead and go. In this case, we will go into a sale, but it will give you exactly with the other indicators what the entry point for the sale is. Okay, so we don't use this indicator just by itself. Then we have the technology power, which has already been in use over here. And basically what the technology power does is it tells you, gives you an indication of which direction things are going to go, whether it's bearish, whether it's bullish. In the case over here, we're looking at a bearish. Okay, you're seeing that it's over 70%. Okay, so anything over 70%, you go ahead and sell. If it's red, if it's blue, anything over 70%, you go ahead and buy. And that's how that indicator works. The next indicator over here is the supply and demand. And basically, I explained this one over here. This graph over here will go ahead and tell you, where your supply zone is and where your demand. All right. So that's basically it. You use it in conjunction with other indicators to go ahead and aid you in making the decision of whether you're going to buy or sell. Just giving you more definition of where things are. The trend confirmation is just does what its name say. It tells you which way the trend is going. It's going to go ahead and sell, or it's going to go ahead and buy. Okay. The closer it is to price, the more accurate it is. Mix over here is the volume energy. I love this one because it tells me which way the volume is going. Okay. Big red arrow is telling me that the sellers are dominating. Little red arrow says there's a little sell action. Big blue arrow tells me the buyers are dominating. Little blue arrow, a little less action. You know, very easy to go ahead and read. All right. And again, you use all these indicators that I'm showing right now, you're going to use in conjunction with other indicators to make a decision. Volume energy. Same thing. Okay. Same top is going to tell you where buying and sales are going. The big arrows are are stronger signals. Little arrows a little bit less strong. This one, X momentum. Excellent indicator. Did I leave the volume energy up? I sure did. All right, take it down. All right, the X momentum is going to go ahead and very much give you a channel. Okay, so what you want to go ahead and do is you want to see where the price is in relation to that channel. And then the scales up on top and the scales on the bottom are going to tell you whether blue is going to be purchased. It's going to tell you where the volume of purchase is. It starts very low and then it increases and then it decreases and then it finally changes to a sale. And here's your volume for the sale. So again, you pair this indicator with other indicators to know where exact entries are going to be. And I'm going to show you some of those in a minute. And then the last one is going to be your zone arrows. Zone arrows are going to tell you exactly where to get in. Boom, sale, buy. They're going to come pretty much right before the change happens. So they're giving you that indication. And as you can see, the commonality of a lot of the signals are the arrow. So what you will go ahead and do is you combine all those things to make a determination of whether you're going to go ahead and buy or you're going to sell. I'm going to go ahead and take everything out. And now we start with a naked chart. And then we go to my templates. Okay. The first template that we're going to go ahead and go over here, all right, is the double arrow with a boost. Come on. All right. And as you can see, we have several indicators that come into play right here. We have the pivot points and we have your zone arrows and you have your boost arrows already, everything combined. So what you do on this strategy is very simple. We're going to go ahead and take, for example, right here. You see that you have 3 arrows, okay? All right. But right now, if we were to take a look at this, where is that price compared to the pivot points? When you have this situation over here, up here below the lowest pivot point, that's going to be your entry point. And let me look for one over here, like this one over here. Okay. You see over here, you have 3 arrows and the price is below the pivot point. So what you're going to do is you're going to enter on the white arrow. So we go ahead and take a look at the white arrow over here, and there's your entry point, and you're going to go ahead and enter, and your first take profit is going to be your next pivot point. So if you enter over here and you come in over here, all right, to your next pivot point, that's exactly 80 pips. Okay, so that's your first take profit. And your second take profit is going to be right here, the last pivot point, which is 154 pips. But as you can see, the price never touched over there, over here. And it never got there until here. Okay. All right. What you want to go ahead and do on this type of trades, you're going to go ahead and put your stop loss behind your white arrow. All right. So let's see if we obviously hit the take profit 1, okay, without hitting your stop loss. So let's take a look. We never hit stop loss, and here's your take profit 2. Okay. So as you can see, we hit both take profits, never hit the stop loss. Now, how long did it take for the second trade? Well, if we go ahead and let me go back over here. If we go ahead and take a look over here, and price went from roughly here to here, that's 20 periods, and we're in the 1 hour time frame. So that's 21 hours. So that's 20 hours for that trade to go ahead and take the profit too. Okay. Any questions? Are we clear on that strategy? All right, so let's go ahead and go to another strategy. Looking at my templates over here. Bullish and bearish twin arrows. Okay, same principle. All right, we're going to look at our pivot points. If we are above the pivot point, okay, we're going to go ahead and take a sale. If we are below the pivot point, the lowest pivot point, we're going to go ahead and take a buy. So let's take an example right here. You have your arrows. We always going to enter on the white arrow. So we enter right here. We're going to go ahead and take our stop loss, and we're going to place it right back here behind the white arrow. Okay. So we're looking at from here, we're going to take profit 1 is going to be your first next pivot point. So we enter right here and we go over here. That's 91 pips. We go to second take profit over here. That's 161 pips. Let's see if we ever hit it. Yeah, we hit it right over here. Did we ever come close to the stop loss? No, we did not. So we stayed on that trade for a long time. Okay. All these strategies over here are for swing traders. Traders that are going to stay in trades for 1, 2, 3, 4, 5, sometimes even a week. Okay. Is this making sense? How we doing for time? We got a little bit more time. Okay, next template over here. Let's do something for the scalpers. Okay, this over here, we're gonna do on the 5-minute time frame. Okay. And this is for scalpers. All right. What we're gonna do is we're gonna look for doing trades when the price is in consolidation. Remember how up until now I've been telling you, you know, consolidation is not your friend, stay away from it. Well, on this right here, consolidation is your friend. How do you know that the price is consolidating? That's where a moving average over here is. When the moving average is inside the X channel, okay? That price is in consolidation. I mean, you see over here, the change is very little. Okay, very little price change in price. We're looking for your orange arrow. We mark the orange arrow, boom. Okay. Then we're going to go ahead and look for the next entry point. We're looking at the orange arrow and we're going to go ahead and wait for price to cross the 80. When price crosses the 80, you're going to mark it right here. All right. All right. That's when we're going to go ahead and take our trade, because we're going to wait for price to get to the highest point. And what I'm going to do is I'm going to go ahead for a second so that we can see it clearly. I'm going to take the X momentum and I'm going to delete it. All right. So we see right there what the price is. All right. We're going to go ahead and make our entry right there. And we're going to go ahead and write it for 100 pips. So if we go ahead and do 100 pips, we're coming. Let's move this over here. Right around there. Okay. And as you can see, it went up and down, 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 but it got to its destination. Now, did it ever hit a stop loss? Let's take a look. We're going to set the stop loss right behind the arrow. So your stop loss is up here. Okay. Did it ever get close? No. All right. How long were we in that trade? We were in there for 131 periods of 5 minutes each. So that is 131 times 5. That is 655 minutes divided by 60. That's 10 hours. Okay. And if you go in ahead and made 100 pips, and that's a standard lot, that's $1,000 in 10 hours. Not bad, right? Okay. And I think that is going to draw us to a close. Any questions? Anybody? Anybody?
Thanks for going through all that. It's just gonna take me some time.
And it's all repetition. And it's all repetition. It's all repetition. I mean, the more you see it, the more accustomed you get to it.
Yeah.
Okay. The more familiar you become with it, the easier it is to recognize things. Okay. And it's, you know, you just got to make yourself a product of the product. And how do you do that? You hit the videos. How do you think I learned all this stuff? I hit the videos. And then I don't miss a class. And I tell you, I don't miss Tas's class. I don't miss Manoa's class. I don't miss Domingo's class. Miss Janice is the bomb. Okay. She is the bomb. Derek is absolutely incredible. Okay. All the educators are absolutely awesome. They break it down so simply. Okay. It's all taught in plain English. None of this complicated jargon. Okay. None of this stuff that is going to go ahead and confuse it. They're very slow and methodical, and they teach the right way. I mean, I have learned more in the past 4.5 months, 5 months than I learned in the prior year and a half doing trading. And it's because of the power of the university. I mean, those courses are absolutely on point. And then the power of the educators. Okay. And if you're in a team that is not encouraging you to learn, shame on them. Okay. Because, you know, the biggest thing that I tell everybody, and Marilyn can go ahead and tell you, and Carrie can go ahead and tell you, the biggest thing that I tell everybody is, if Tradenology happens to go ahead and go out of business and you have learned the skill, guess what? You can keep on trucking. You can keep on earning money every day, regardless of whether Tradenology or Edgar or Tass or Marilyn, or regardless of whomever is around you. So learn. I mean, you're paying all this money for the knowledge. Okay. You're paying $100 a month. That's $1,200 a year that you're paying for this if you're in the primary. Okay. More if you're in the VIP. But you're putting all this money, you're investing all this money in your future. Take advantage of it. Learn. Okay. And then you too can go ahead and pick up 315 pips like I did last Friday, because I saw it coming. I saw what was coming and I got in the middle of it. And, you know, unfortunately, I was working because I saw another move that was developing, and I'm going to show it to you, and I'm still kicking myself. All right. Because using this supply and demand. All right. Let me go ahead and go back over here. We're going to go to the 4-hour time frame. All right. Last Friday morning, okay, as I was, you know, in the middle of a conference call, I was just about to get in the conference call, and I saw this right here. So that green arrow up here, okay? So right here, I could have got in on this. And look where it closed. All right. That, ladies and gentlemen, is a 9,828 pip move. Yes, you heard me right. 9,000. Okay, let me measure it again. 9,726. Okay, 9,726 pips move. Let me translate that to money. Okay, at the low end, at a micro lot, $9,726 times 0.10. That's $972. At the low end, that's just doing a micro lot, which is 10 cents per pit. Okay. 9,726. If I would have done a mini lot, which is $1 per pit, that's a $9,726 trade. If I would have done a standard lot, which is $10 per pip, that's a $97,260 trade. And I slept on it. Now, do you think I'm sick? I by the end of the day on Friday, I was getting ready to throw up. Okay. I mean, I don't have the kind of money, and probably most of the people in this call don't have the kind of money to go for a full lot. But I could have done a micro lot at least. It would have been $1,000. You know, $972. I'll take that all day long and twice on Sunday. I could have done a mini lot, okay, and put $1 per pit. That's a $10,000 day. Because 9726, that's $10,000. Who wouldn't want to have that kind of day? I mean, there are people that don't make that in 6 months. Okay. And because I was busy and I didn't go ahead and take the time to go ahead and put in the trade, all right, because it happened at the same time that the gold trade happened. So I took the gold one and I slept on this one because US 30 is very volatile and it can swing up and down. So I stayed out of it, you know, being conservative, and I gave away $10,000 because I would have put a mini lot on that. I would have put the mini lot, and my stop loss would have been back here. Okay. So it never even came close to it. All right. So lesson learned, people. It pays to be a VIP. It pays to gather the knowledge. It pays to get what you're paying for. Okay. And on that note, unless somebody has something else, I'm going to close it up. All right. Thank you, everybody. Make sure that we see you tomorrow. All right. Remember, team meeting at 7 p.m. We got to have a lot of stuff to go ahead and go over. And we're going to define, you know, the March Madness that we're about to go into. Everybody remembers the March Madness? So all the prices and all the rules, we're going to go over all that stuff tomorrow. So do not miss that meeting. I'm sorry?
No, that was my son. I was about to ask a question.
Okay.
But he asked me a question first. This is pertaining to the Tradenology Vegas trip that was supposed to be in August. I heard
No.
it was canceled.
No, we're talking about March Madness, which is a contest that we're doing for the mob. Okay.
I know that's for the mob, but my question was pertaining to that event.
Yeah, that event has been canceled for now, and they're looking for a new venue and a new time frame.
Okay, so those who bought tickets, they're still holding those.
That is correct. And that's for the Las Vegas event, correct?
Yeah,
Yeah,
because I was trying to
Yeah.
see whether or not I
Yeah,
should get a
it's-
refund or let
it's
it
gonna be,
sit.
it's gonna be in Vegas, but they haven't come out with a location and a time yet. Okay, and the reason it was canceled was because of COVID-19 concerns. Because Las Vegas was going crazy.
Okay, because yeah, I was trying to determine whether or not I should ask them for a refund or just let it sit.
You can, I'm letting mine sit. I know that money ain't going nowhere,
Okay,
okay? But
all right,
we'll go ahead and see.
thank
All
you.
right? All right. So thank you, everybody. Everyone have a good night, and I'll see everyone tomorrow. Bob?
My.
Mob.
Mob.